Hey, Alexa, play Tyrone Jackson's Trading Stocks Made Easy podcast.
Okay.
It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey, it's Tyrone Jackson, the wealthy investor. We are back again for another smashing episode of the Trading Stocks Made Easy podcast. I thank you for being with me, and I think today's show is a real treat. You know how I'm always taking you behind the scenes so that you understand how to trade and invest better in the stock market? Well, today I'm going to take you behind the scenes, and we're going to talk about investment banking basics. Now, initially, this seems like, what does an investment bank have to do with Wall Street, volatility trading a stock, covered call writing, collecting dividends? Well, the reality is, if we didn't have the investment banking community behind companies that go public, you and I would not have the opportunity to invest and trade in certain stocks in certain sectors, okay? So this show is always about getting a financial education so that you can put it to work. Now, one of the things I want to spend a little bit of time with you around, as always, is your mindset and your money beliefs. This is so important that you really begin to open your mind to the financial world and all of the possibilities that are realities for investment bankers, traders, and the Wall Street community at large. What I like to do is try to point out to you what's going on behind the scenes before a company even becomes public so that you understand the complete process. Now, when you were growing up, we're going to go back to your childhood just for a moment. Can we dim the lights in the studio for this one? Thank you so much. We're going to go back to your childhood, and I want you to think about the financial education you received from grades 1 through 12. Remember that? And remember when you got into about the 8th or 9th grade? Well, it was that stock market investing and investment banking basics class you had in the 4th period that really taught you about money. They also taught you in that class, when you were just a wee little tyke, about how to balance a checkbook, life insurance, and how taxes work. Remember that class? Neither do I, because we didn't get that class when we were growing. Therefore, you have to turn to the Trading Stocks Made Easy podcast to learn the mechanics of what goes on Wall Street. The reason that you got very little financial education in school, and I hate to drop this on you, but this is the reality, because America is obsessed with educating the working class. Everything you were taught, grades 1 through 12, was so you can get a job and work for someone else. Now, our friends and peers who went to exclusive private schools, what do you think that they were encouraged to do? At some point, they were encouraged to go to a college to learn to start a business, to be an entrepreneur, to learn how balance sheets and income sheets actually worked. So although we were all growing up together, people we met later in life had a different education around money and wealth because their parents were paying for it. Do you see the connection? Very few public schools in our country focus on financial education. They want you to have great penmanship, know something about history, something about social studies, whatever that means, a little science, and certainly math, but not how the math can turn into millions and millions of dollars. So the experience that I frequently have when I'm out and people go, hey, you're that wealthy investor guy, right? They say, I love your podcast because I always feel like I'm learning something. Well, you're learning essentially what you should have learned in grades 1 through 12, but there was no entrepreneurial training there. And therefore, no expectation was put before you to be wealthy and financial independent. It doesn't make sense that someone would magically appear and say, here's how you become wealthy. That is contrary to the goal of public education. Are you with me? Now, I'm not putting down the public school system at all, and all of our wonderful teachers who are loving, encouraging, and inspirational. That's not what this is about. It's just noticing where the void is, so that when I suddenly say to you, Wall Street has now become a $1 trillion game, you won't have that reaction of, Tyrone, what are you talking about using trillions of dollars? But that's what it is right now. So let's go back and look at investment banking's role in taking a company public so that you and I can then buy shares. So I built my whole brand, if you will, on the idea of demystifying Wall Street. I'm going to make this extremely simple. There are hundreds of nuances in between, but I want you to think like an investment banker. And in order to do that, I've got to explain to you how they play a role in Wall Street. Let's just say you and I started a company and we thought it was a great idea. And we took a home equity line of credit and we built prototypes for our products and services that we would offer behind this idea. Right? All right. So maybe we tapped our home for about $100,000 and we said, this is going to be our seed money and this is how we're going to start our business. And we build a website. And then we go to certain industry events. We learn how to become digital marketers and we buy some ads online. And guess what? We start to sell and it's going really well. Remember that $100,000 that we tapped? Well, guess what? In our first year, we made $200,000. So we took a teeny bit of a salary and we said, we're doing really well. But in order to blow this up, we're going to need probably $5, $10, $15, $20 million. Well, where are we going to get that from? Well, unless we can call an uncle or an aunt who had a huge inheritance, we're probably going to need someone else's money to make this online business, which is already a hit, that has proven revenue. In order to grow it, we're going to need somebody else's money. Now, if we are tapped into the right circles, we can call people and say, hey, listen, we've got this small company. We've doubled our revenue in 52 weeks, but we need more seed capital and more muscle behind us. And our friend goes, oh, well, let me call Bert over at this investment banking firm. This is what they do. We can either go to an investment bank if we have our balance sheet and all our information written down, or an angel investor, or what? A venture capitalist. But I'm going to keep it in the realm of investment banking. So this investment banking firm says, well, come on over. We'd like to see what you have. And we show them and they go, well, you've doubled your revenues from 100,000 to 200,000, but this is too small. We're looking for businesses that need $50 million. And we go, well, we could use 50 million. They go, no, you're just a little too small. So we leave the meeting. We've made a few contacts. We're still positive. We go, hey, listen, I think if we run a bigger and better online campaign, we'll get more customers. And let's add these 3 more services. Well, 2 to 3 years go by. And what happens now? We now have a $5 million business. But we remember those people that we met in that room that said, if you ever need 50 million, come back and see us. We call our friend. We go, hey, our business is now at $5 million. We'd like to see if we can get $50 million because we think we could take this company public. So your buddy's still around. He still remembers you. The investment bank is still around. And we go back to that meeting and they go, you guys now have $5 million in sales. What's your long-term view? What do you want to do? Well, we'd like this company to be as big as Amazon.com. And they chuckle and they go, we don't know about that. But how much money do you think you need in backing? Because we see this business growing exponentially. We see your vision and you guys have proved that you're serious. We might be able to get you 30 million, maybe not 50 million. And then we talk with them. We go, well, what would we do with the 30 million? They say, well, how much are you spending on marketing? How much staff do you need? How much brand awareness do you need? Do you need a partner with another company? We think we can get you all that and put $30 million into your business. But here's the deal. Our goal is to make this a public company. And we go, well, okay. They said, but if we put in this $30 million into your company, we're going to want to own 60% of it. So you and I being partners, we go 60%. Well, I don't know if we want it. It's our idea, right? But we realized that of the 30 million, we would now each get $1 million in salary. Plus, if the company went public, we would be major shareholders. So we say to the investment banking guys, after talking months and months and months, we'll accept the offer of 30 million with the goal of taking the company public. Well, that process that we just walked through, Every company that has gone public went through something similar. Why would the investment banking firm be willing to put up $30 million in the company? Because their goal is to take the $30 million, their initial investment, and turn it into $150 million. So before they put up the $30 million, they already had a whole stream of people that will be preparing to take this company to the public market. So we, you and I, are still major shareholders. We're going to get shares in this company at, let's say, 50 cents a share. But when those shares hit the open air and go public at $55, we are rich. Why? Because we can take our shares and sell them to the open market. Except we cannot do it the day that we went public because we're in something called a lockup period. But if you and I each had 10 million shares at 50 cents and the shares hit the open air to the public at $50, we could be worth billions of dollars. But we can't sell our shares, again, because of that lockup period. Well, guess who else got shares at an insider price before the public process actually happened? The investment banking firm. So when our shares went public, their $30 million, depending upon pricing, could be worth over $150 million. So Wall Street and the investment banking community do a lot of business together. And without that initial seed capital to take the company public, you and I couldn't get richer trading these technology companies in the open market. But the people who put up the money initially on the investment banking side, they became worth what? Billionaires. So let me ask you a question just based on this little lesson and scenario I've just created for you. Do you think there was investment banking money behind Amazon.com? Well, we know if the CEO, Jeff Bezos, is worth almost $1 trillion or will be at some point, how about the investment banking firm who put up the seed money before they were a public company? Do you get it? Okay, so every publicly traded company had some relationship with an investment banking firm before they went public. Take a company like Starbucks, right? Where did Starbucks get the seed money to grow itself exponentially before they went public? Probably from an investment banking firm. Now watch this. There are investment banking firms that have a history of taking winning companies public, and those companies can systemically grow their top-line revenue. If you could take 17 companies public and each investment was $50 million, and you took 17 companies public and they were all successful, how many billions of dollars would you get in share value from the open market? Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Welcome back. So we were talking before the break of how do we find out where the big investment banking money is in a stock so that when a company goes public, we know it's time to buy. Well, when a company goes public, there's all this information you could find online. My favorite research website right now is Yahoo Finance, and it's been that way for the last 20 years. So if you want to find any data on a company, you can simply go to yahoofinance.com and put in the company's ticker symbol. Now, what I'm looking for when I research a company is the involvement of the institutional shareholders and their names. But that doesn't ensure that the stock is a winner. I'm also looking for the revenue of that company. Because sometimes even investment banks invest in companies that once they're public, the revenue falls short. So I never purchase IPOs. Why? Because we're interested in the revenue, right, after the company is public. So when I'm researching a stock, I always want to see where the big money is on the investment banking side. And most of the time, it's names you always recognize because they're constantly bringing companies public. The second step is I need to wait at least 3 years after the IPO to determine if the company is a worthwhile investment. In other words, I know who the investment bankers are, but that company needs to prove to me after 3 years of being public that they have the ability to have their revenues rise. I don't care what firm brings a company public. If the revenue at the company, once they're publicly traded, is not there, you stay away from that stock. Because with all that money, all that push behind it, if they can't generate hundreds of millions of dollars annually for 3 years, we would never trade or invest in that company's stock. It's simply not a good date, as we say in the Wealthy Investor Program. So some of you who are not in the Wealthy Investor Program are chasing companies and their share price because they're cheap. And as I always like to say, why are stocks cheap under $20? Because there's no demand for them. They're not a company you want to date. Right? Usually, you don't want to own shares under $20 because the revenue is not there to support the stock price going higher. So although now we understand the investment banks that invest in companies, sometimes investment bankers get it wrong and they push these companies to go public so that they can take their $30 million, turn it into $100 million, $150 million in the process of going public, but it doesn't mean that the company financially is sound. That's why some of you get caught up in, I'm going to get rich buying cheap shares, but you're buying the wrong shares because some company pushed them to be public too soon before the revenue was rising. So now you get a glimpse to all the players it takes to take a company public and to grow revenue and who's betting on what. Your job is to do your research thoroughly so you can choose good companies, good stocks when you're trading in your cash account, your retirement, or for someone you love. Hey, listen, that's a big lesson here today, but I think it's really important that you understand some of the players and the mechanics that go on Wall Street. The good news is you can be a part of it all if you continue this process of becoming financially educated. Hey, this is Tyrone Jackson. My time, just like an option, is almost expired. That means I have to go. But I'll see you right here next time on Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.